Welcome to our monthly Forex report for August 2013. It's hard to believe the calendar year is two-thirds behind us now. Let's go ahead and take a look at our major currency pairs and our major currencies and see what's happening. This blue line here represents the zero line. So we have compiled the US dollar sentiment index here, and we can see it's hugging this blue zero line. So the US dollar is not really trending at this point in time. Taking a look at the euro, we can see that the euro has been above this blue line since April of this year. This means it has been in a relatively strong uptrend. Looking at the Japanese yen, even though it's relatively close to the blue line, we can see that it has been above the blue line since May of this year. Again, a relatively strong uptrend for the Japanese yen. While the British pound has only been in an uptrend since August 2013, we can see historically that the pound's moves here in August 2013 were the strongest since January 2011. The Swiss franc, not surprisingly, just like the euro, has been above the blue line since April of this year. Again, this means that the Swiss franc has been in a relatively strong uptrend during this time. Take a look at the Australian dollar here. It's been way below the blue horizontal zero line since April of this year. And even though the monthly depreciation in the Australian dollar has been moderating, it's still been in a significant downtrend. The Canadian dollar here is almost the exact opposite of the British pound. It's been relatively stable, hugging this blue line until we got to August 2013. We see a significant move lower here below the blue horizontal line. And in fact, the Canadian dollar registered its worst performance since August of 2010. Finally, the New Zealand dollar. We can see the New Zealand dollar had a difficult period here in 2013 between May and June. Again, here in August, we can see it was quite weak. And in fact, the New Zealand dollar was the weakest currency pair of the 7 or 8 major currency pairs in August of this month. In fact, on a historical basis, we can scroll back to August or September of 2011 to see how weak the New Zealand dollar has been. Let's go ahead and take a look at some of our individual cross rates to see how they have performed, keeping in mind that we want to focus on currencies that have been in a trending environment. Here we see the British pound against the Canadian dollar cross rate. We can see that this blue up arrow indicates the currency has bounced off this key support level at 162.73. In fact, by using some Fibonacci extension analysis, we had an exit sell limit up here at 164.89. And just a few days ago, it reached that area and came off. This has been one of the best trades that we've seen in quite some time. This is the British pound against the New Zealand dollar. By using Fibonacci analysis again, we would expect that the British pound may test this 2.0147 area relatively soon. The fact that the pound bounced off of this key support level down here is an indication that we may move higher. This is the New Zealand dollar against the Canadian dollar. We see a range here from this relative low all the way to this relative high. And we can see some major technical support coming in around 81.29. That's in fact right around the area where we closed the month of August. So we'll have to wait and see if the New Zealand dollar is weak enough to fall down to the 8058 level down here, which is the next support line on the way down. Here we have the British pound against the Australian dollar. It looks like a one-way street since April or March of this year, right? Well, it generally has been, but let's put that in a better historical context. Here we see a weekly chart of the same cross rate. We can see, in fact, that there was a lot of selling pressure subsequent to this move higher this year. When we take a look at this on a monthly basis, our perspective changes entirely. We can see this huge move higher here back in late 2008 when the financial crisis was at its worst, all the way down here. In fact, this particular cross rate lost about 54% of its value from peak to trough during this period. Pay particular attention to this line right here. This represented the first line of resistance for this cross rate. This came in at 173.07, and we can see that we are trading above this level right now. If the British pound continues to appreciate against the Australian dollar, we would look for a test of this 191.33 level right here. This is the euro against the New Zealand dollar. Again, by moving from this relative low or trough here up to this relative peak or high here, we can note that the euro almost perfectly tested this support line here. That comes in at 163.35, and we've noted it with the blue up arrow. It's trying to move above one key resistance here at 171.14. We'll see if it has enough strength to do so. In fact, that's right around the area where it closed the month of August. As we can see from these cross rates, sometimes a lot of alpha can be earned and lost in the cross rates. When we see cross rates exactly testing key support and resistance lines, such as is indicated by these arrows, we can begin to understand why particular currency pairs overshoot. In this case, some large orders came into the market, supported the euro against the New Zealand dollar at this level, and chances are the euro against other currency pairs would have overshot or undershot their values based on this level that was being supported in the cross. We see that potentially here with the New Zealand dollar against the Canadian dollar. We definitely saw that here with the British pound against the New Zealand dollar. We definitely see that right here with the British pound against the Canadian dollar. Let's go ahead and take a look at a couple more rates. Here's the euro against the Canadian dollar. We see that supported here with the blue up arrow at around the 134.22 level. When we do some more Fibonacci analysis and extend those retracement lines, we would have expected the move to run out of steam right around the 140 big figure up here. Of course, it went a little higher and then it came off. Here we see a similar situation on a cross rate. This is a daily chart of the New Zealand dollar against the Japanese yen. We can see the New Zealand dollar tested this key resistance level right around the 80.40 level and then moved lower. Again, this is a classic, perfect example of how and why the cross rates are very important to keep track of. Using our Fibonacci analysis and extension, we actually would have expect that the cross rate could test this 74.40 level, which just happens to be coincident with a move and a relative low from June of this year. Here we see a monthly chart of the Canadian dollar against the Japanese yen. This is actually one of the more interesting charts we're going to see in quite some time. We can see right here with the red down arrows that the Canadian dollar almost perfectly tested these resistance levels on this monthly chart. We expect that to happen more frequently with intraday charts, daily charts, and to a lesser degree, weekly charts. But when we see this happening with monthly charts, it's a very clear indication that something is happening. So for July, which is this green bar here, and August, which is this green bar here, we see some significant selling pressure after these resistance lines were reached. This means this Canadian dollar, Japanese yen cross rate has been a very technical trade, and a lot of people have made a lot of money trading this technically. Here we see the Australian dollar against the Swiss franc. If you remember earlier, we said the Australian dollar has been in a significant downtrend for months, and we said the Swiss franc has been in an uptrend since April of this year. This red down arrow represents a key test of the 99.68 level by the Australian dollar. Using some Fibonacci retracement analysis based on this range here, from this relative high to this relative low, we would have expected and taken some profits with an exit sell limit down here at the 87.78 level. We've used this blue up arrow to indicate exactly where we would have taken some profits, and we can see the market almost perfectly tested this level back earlier this year. Since then, the Australian dollar has continued to depreciate, as we see here. Here we have the euro against the Australian dollar. Again, it was in a significant downturn in this monthly chart, and then basically from July or August of 2012, it has moved higher. We drew this blue up arrow to show how the euro bounced off and higher from this key support level at 138.11. We might expect a next upside target to be right around the 151.89 area, represented by this horizontal line right here. Finally, we have the Canadian dollar against the Swiss franc. When we look at this relative high here and this relative low here, and we draw some retracement lines, we have another classical example of how a cross rate exactly tests key support or resistance, in this case resistance, and then moves lower. This 95.43 resistance level is indicated by this red down arrow. When we in fact extend these Fibonacci retracement lines, we would have expected that this cross rate would have reached 87.47, and we would have had our exit buy limit there. In fact, that's exactly what happened. It came down to right around this level. People exited their shorts, and some more buying has taken place. We hope you have enjoyed this August monthly Forex report. We have 4 months remaining in calendar year 2013. We hope they are very profitable for you, and remind you to keep your eyes on those cross rates. Thank you.